Implicit in Glass-Steagall, but explicit in the reestablishment of the American credit system, is the need for a redefinition of value or wealth in the economy. This means a drastic and rapid departure from the way things are done now under our current monetary financial system. Since the 1999 formal repeal of Glass-Steagall, large banks have been allowed access to commercial deposits, to make bets on money markets, and to leverage their so-called assets to absurd levels. Spurred by continued gradual deregulation over the past 50 to 60 years, this has led to increasingly large financial bubbles, the need to cannibalize commercial or legitimate financial assets that are actually tied to real useful functions, the looting of those actual physical assets and capacities themselves, and then, as we all know too well, taxpayer bailouts from the public once those bubbles inevitably pop. These private banks answer to and are overseen by an even larger private bank, the Federal Reserve, which prints more and more money to honor these financial obligations and transactions. The U.S. government is, all the while, beholden to and recognizes these activities and protects it as the legitimate functioning of the economy. And while this description is admittedly very general, the purpose and function of a monetary financial system is to uphold and promote the accumulation of mere paper for its own sake, to the momentary benefit of a very few, and to diminish and confine the entire role of government to merely policing these transactions. Today's monetary financial system is a glorified casino. It is functionally and scientifically invalid, and as the rate of its collapse has outpaced the rate of bailouts required to cover the losses, the need for this system to be abolished has never been more clear. The credit system, on the other hand, works in a completely opposite way. However, it's not simply another way of doing things. It contains an entirely incommensurable conception of value. Under the credit system, the U.S. government evaluates potential measures to be taken to improve the overall economy, determining actions and projects that will create a more productive future state of economic activity. With an initiative to build NWAPA 21, for example, a massive project that would fundamentally alter our national infrastructure and productive capability, the design for such a project would define the needed lending and commitments required for Congress to produce legislation and appropriate necessary funds. These funds would then be monetized by the Treasury and applied by a credit fund such as the National Bank, with strict conditions and regulations to ensure that those funds produce the intended effect and accomplish the project. In a credit system, the U.S. government, rather than some group of private banks, determines the amount of money in circulation, and the value of said money represents the projects and efforts to improve the economy, rather than some arbitrary index or physical material such as gold. In all cases, the crucial principle of the credit system implies 1. A basis for lending, 2. A unification of resources of the nation channeled toward needed developments in manufacturing and projects, and 3. A system where currency is defined by a future state of the economy. The key to all of this being an intention to increase the productive powers of labor and generate higher states of organization and technology for the future. In the credit system, increases in value have a direct relationship to the potential to create increases in physical productivity. At the present time, anything short of high technological investments associated with our program for NWAPA 21 and related projects could not restore this credibility.